So Occidental Petroleum just made a massive, nearly $10 billion bet on its future. And to really get what's going on, we're going to deconstruct their latest quarterly financial report. It's a document that spells out a huge strategic shift for this energy giant. Okay, so here's our game plan. We'll kick things off with that headline-grabbing multi-billion-dollar sale. Then we'll quickly break down what this document we're looking at even is. After that, a quick financial snapshot. Then we'll get into their core strategy. And finally, we'll look at the risks they're telling investors to watch out for.
All right, let's just dive right in, shall we? Let's talk about the biggest piece of news in this entire report. The one move that's really making waves across the whole energy sector.
So, right up front, the filing throws out this one massive number, $9.7 billion. So what in the world is that for? Well, that number, it represents a truly monumental deal. Occidental is selling off its entire chemical subsidiary, OxyChem, to none other than Warren Buffett's Berkshire Hathaway. I mean, this is a huge move that fundamentally changes the shape of the company.
So why do it? Why sell off a whole division? Well, the filing is pretty darn clear about it. This sale is all about one thing: paying down debt. This isn't just some simple transaction. It's a major strategic pivot. Okay, before we get any deeper into the performance numbers, let's take a quick step back. It's super important to understand where all this information is actually coming from, because it's all straight from the source.
So the source for all this is something called a Form 10Q. You can kind of think of it as a mandatory quarterly report card for any company that's publicly traded. They have to file it with the SEC, and it's just packed with financial statements and the management's own take on how the business is doing. Okay, so now that we know what we're looking at, let's use it to answer the real question here. How is Occidental actually doing? What's the state of their financial health? All right, let's get into the nitty-gritty, the company's core performance. And you'll see the numbers here, they tell a really fascinating story about the kind of challenges they're up against right now. So if you look at their profitability, you can see things are, well, they're trending down. The net income that goes to stockholders dropped from almost $1 billion in the third quarter of last year all the way down to $661 million this quarter. That's a pretty significant drop. And if we zoom out a bit to look at the top and bottom lines, we get even more context. You see, net sales were down from over $7.1 billion to about $6.6 billion. And that pressure on sales, it flowed right on down to that lower profit number we just saw. So you might be asking, why the dip? Well, the company is pretty upfront about it. In their own analysis, they point directly to one key factor. Crude oil prices were just lower this year compared to the much stronger prices they saw back in 2024. And this is where it all clicks into place. That huge sale we talked about, it connects directly to their number one financial goal, deleveraging, or in plain English, paying down a mountain of debt. And wow, are they making progress? You might remember that massive debt they took on for the Anadarko acquisition a few years back. Well, in just the first 9 months of this year, they've already slashed their long-term debt from almost $25 billion down to under $21 billion. That's over $4 billion paid off before a single dollar from that OxyChem deal even hits their bank account. So how does the big sale fit into their broader plan? Well, the company pretty much lays out a 3-step playbook for its cash. Priority number 1, get that main debt load below $15 billion. Priority 2, start delivering a reliable dividend to shareholders again. And priority 3, reinvest in their main business, their oil and gas assets. But, a report like this, it's not all sunshine and roses. The company is legally required to tell everyone about the potential risks to the business, and a lot of them you'll see are tied directly to this gigantic deal. And here's the other side of that coin, right? The flip side of this huge bet. The company's flagging some key questions, like what happens if the deal actually falls through? What happens when they lose that steady, reliable cash flow from the chemical business, leaving them way more exposed to the crazy swings of oil prices? And this one's a big one. They're holding on to some major environmental cleanup liabilities from OxyChem's old sites. Which really brings us to the big, final question that this whole report leaves us with. Occidental is selling a stable, cash cow business to double down, to go all in on the much more volatile world of pure oil and gas. So is this a brilliant, savvy move to fix their finances for good? Or is it a really high-stakes gamble on where energy prices are headed next? This report gives us all the pieces of the puzzle, but honestly, only time is going to tell how this massive bet really plays out.